Welcome to Finance Revealed. Watch the complete video to discover new market secrets. Subscribe now.
We've seen some countries ban it, and then some of them actually kind of walk their ban back. And so it's kind of a challenging thing where they can't ban Bitcoin, but they can ban themselves from Bitcoin. And then they start realizing maybe this was a bad idea, and then they reverse course. I think that one of the major kind of tail risks would be if, say, the United States and Europe banned it, because that would be a big enough blow that there's so much of the capital in the space is in the United States and to a lesser extent Europe, that could actually slow adoption down by a meaningful amount. I think, at least for a period of time. And they can't, it'd be very hard for them to say you can't own Bitcoin, it's illegal, we're actually going to make sure you don't own Bitcoin. But what they can do is make it so that banking systems can't send fiat currency. They basically ban all of the fiat currency on-ramps in a similar way that Nigeria did. But for Nigeria, it mainly just affects Nigeria, and they do peer-to-peer trading. Whereas the United States and Europe, if you were to cut those on-ramps off, that could seriously slow down market cap accumulation. On the other hand, it's in the United States, for example, we have a lot of guns here, and so whenever there's, say, a big school shooting or there's a president that gets elected that's not very favorable towards guns, a lot of people that like guns go out and buy more guns because they're worried that they might not be able to buy them in the future, or it would be harder to buy them in the future. And so they go out and they actually have, one of the best things that ever happened for the gun manufacturers was Obama's presidency, because they were concerned that he might want to reduce their ability to buy guns. And so you could see that kind of thing, ironically, with say, Bitcoin and some of the other cryptos, where if they get heavily restricted from being owned, you could have actually people go out and buy a lot just to make sure they get them. And so we actually don't know the full game theory for how that would play out. But I do think that basically a ban from the banking system from Europe and the United States is big enough that I would consider that kind of a concern.
And do you think it's plausible to think of a ban from the United States and from Europe, especially thinking that Europe is pretty fragmented in terms of their own banking? Like you have Switzerland that's got one approach. You have, I guess, Portugal that has another. Do you see that ban actually being possible? Or, I mean, I guess everything is possible, but like a real chance?
I think a very low risk. I think it might have happened earlier, but it didn't. And now that it's big enough, for example, that now it has its own lobbying group. In fact, that's actually playing out right now in the United States. They're passing an infrastructure bill, and they kind of snuck in this like way to kind of try to get more taxes out of cryptos. But it's poorly worded because it's written by people that don't fully understand it. And they're basically saying that if you assist in like transferring it for another person, you have to like file these crazy tax forms. And that can technically apply to miners, that can apply to Lightning nodes, that can apply to like DeFi, and it's like unenforceable. And people can interpret that as like almost like a mining ban, because you can't operate a miner if you can't enforce. So basically, the lobbying group is trying to say, let's actually clean this language up so we don't inadvertently kind of give this industry kind of a regulatory nightmare to deal with. And so that wasn't possible many years ago when it was a tiny fledgling industry. And so the fact that it's gotten big enough, there's billionaires that own it, there are very large companies that own it, there are senators and representatives that own it, and we see that across the world now, where there's politicians that are say Bitcoiners, or they're into crypto in general. And so I do think that becomes a lower and lower probability now. And I think we've kind of crossed the event horizon. You'd have to have a pretty extreme outcome, especially I think in the United States, just because that goes against a lot of the values of the place. Now, people always reference the fact that in the United States, for example, we had a 40-year ban on Americans owning gold from the 30s to the 70s. It was like literally a criminal offense if you owned a ton of gold. Now, it wasn't very heavily enforced. They didn't go out and just kind of check door to door to make sure no one has gold. But it was kind of like enough of a threat that a lot of people did not own gold. And so, there has been extreme things in history. My overall base case is I think that's a very low probability from any country that really has, some degree of freedom and free markets.
So I'd like to hear your perspective on how CBDs would look, or stance of central banks towards Bitcoin as well, and towards some of these new crypto assets.
Yeah, so I think they're certainly coming. They're certainly on their way here. I mean, we see Bahamas has one. China's obviously very far along. They're basically in the process of rolling theirs out. And most central banks talk to each other, right? So they have the Bank for International Settlements. They have these organizations where it's not like they're all working on it individually. They have a lot of resources they can share. So once a handful of the countries start to get workable adoptions of it, that can quickly spread to other countries as well. And so they're certainly sharing notes on that. And some countries like China are going to love it because China is rather authoritarian. They like to have a lot of surveillance. They like to have a lot of control. And so a currency that can be heavily monitored, that can be, say, shut off, addresses can be blacklisted. You could have it expire. You could have it be programmed to only be expended in certain areas or for certain categories of goods. And so that's something that they like as policy tools. But it's obviously something that a lot of people that like privacy or like control of their own assets would really prefer not to have, or at least prefer to have it optional to use it, right? That they can use it when they have to, but then they can go and as they store their money in Bitcoin, whatever else they want to do, and not be kind of locked into that system. And so I think that's, if we talk about, say, the potential for a Bitcoin ban, I think a rollout of a CBDC is one of those events where you have to be kind of on guard because they could try to crack down on some of the competitors when they roll that out, especially if there's not a lot of traction for it, if people are kind of pushing back on it and calling it a surveillance coin and things like that, if people kind of catch on in a negative way. And so I do think that's a risk point to watch. And so especially because we've seen literature from the IMF and from a number of central banks where they view CBDCs, they can do things like gradually phase out cash, and then if you're kind of locked into that CBDC system, you can even have negative interest rates more easily. For example, like in Europe, they have mildly negative interest rates in some cases, but some cases they prefer to go even lower, but they know if they go too low, people pull out their money and hold it in cash. But if they phase out cash, that kind of limits their ability to do that, and they can actually charge even deeper negative rates, which is really undesirable for the people holding it. And so I think that's going to be an ongoing drama for a while. I also think we have to watch to see how it works between private stablecoin issuers and governments issuing it. And so basically, now we have over $100 billion of private stablecoins, and we have companies like Facebook are interested in getting into them. So right now they're heavily used in crypto trading, but they're not really heavily used for payments. Whereas companies like Facebook want to roll them out and actually start using them for domestic and international payments. And I think we could see a few companies get into that space. And it'd be interesting to see if some countries, like let's say the United States, for example, try to use like private companies as extensions of their CBDCs rather than try to have it issued all directly from them. And so I think you could have some countries go the pure government route, and I think you could have other ones where they use some of the private technologies as well. And so I think it's still a very dynamic space. It's up in the air.
Crypto crash, cryptocurrency questions, cryptocurrency drop, cryptocurrency list, cryptocurrency prices, cryptocurrency kraken, cryptocurrency trading platform, crypto tips, cryptocurrency basics.